There we go. And we're recording. So welcome everybody. For those of you who don't know Mark, I'm going to introduce you to him. His name is Mark Pomerantz. He is one of the owners of Pomerantz and Associates. It was a firm that his dad had years ago, and him and his brother took it over. And Mark has been our accountant, well, pretty much since we got to Virginia. We love Mark. He's a little quirky at times.
And corny.
Awesome. So.
And corny.
And corny. Yep. And all those things. Yep. But he is a master at what he does. And Eric and I have been able to save a lot in taxes when Mark handles our tax returns. So I trust him to give you guys good advice. Since Mark is giving up his time to us, I would ask you guys to keep your video on, please. He doesn't have a PowerPoint. Interaction is going to be important. So if you have your video turned off, I'd like you to turn it on, unless there's some really extenuating circumstances why you can't have it on. He is a very busy guy. As of January 1st, from here all the way until after April 15th, he barely breathes. So his calendar is full, and he has done me a favor by taking some time today to share with you guys. So I want you to be fully interactive, ask questions. As Mark says, there's no stupid questions, just stupid answers. So without further ado, Mark.
Okay, so let me give you a rundown of what I do and how I do it. I am a second generation accountant. My dad founded the firm in '73. We prepare over 3,000 tax clients. We have 4 preparers. My wife is a tax widow. I always take on new clients. And when you mention Sheila by name, I always find special time slots. I can't tell you whether it would be 7 in the morning or 8 at night, but I'm always looking for new clients. I always want to take care of Sheila and her friends. There's no such thing as a stupid question, just stupid answers. So interrupt me anytime. I've been lecturing on real estate since the 80s. I started out with Ryan Holmes, Key Bank and Trust, Fox 5, Georgetown. So I've been lecturing for a lot of years, but I believe in open interaction. I'm not, I don't stand by the podium and just say, it's only my class. This is for you guys. I'll go over a lot of things. And when you have other questions, please ask them. I love the answers. The basic concepts of what I'm going to go through is I'm going to talk about commuting rules, record keeping, substantiation, vehicles, meals. I have a cheat sheet of realtor expenses. And then Sheila's asked me to talk about LLC, sole proprietor, C Corp, S Corp partnership. So I'm going to do that last if I can. But if something's really dying, we can go off a topic. I have my books behind me. And I guess we'll start with the fun stuff. The basic concept of what we founded the firm with was an old court case. Leonard Hand, a commissioner of the IRS, said, it's every taxpayer's legal and moral obligation to pay the least possible tax afforded to him. So I like to maximize deductions. I just got a question is, can we get a copy of your cheat sheet? Of course, I will email it to Sheila, and then she can give it to everybody. It is open book. This is a team approach. The name of the game is for you guys to make money and then for you guys to shelter it by not evading taxes, avoiding taxes. So how many of you guys are married? Do you know what another word for spouse and children are? Employees. My wife used to teach music back in the 80s. My children now are 25, 23, and 20. My children worked for my wife's business. What's the tax bracket of a child making $10,000 as their only source of revenue? 0. So we want to look at that as a concept factor of where the child does work. And do you know what children know more about than we do?
Computers. Technology.
Children know about technology. They know about computers. To this day, I do not know how to do an Excel spreadsheet. I ask my daughters to tell me how to do it. I have my wife do it. When you hire the children, yes, they can be, Heather, they can be over in their 20s, under 20, actually under 18. A child under 18, you don't have to withhold FICA and Medicare in a sole proprietorship. In a partnership, C Corp, S Corp, you do have to withhold FICA for any child. But under 18, you don't have to withhold FICA for children under 18. Over 18, yes, everybody has to have FICA and Medicare withheld. But we're talking about your tax bracket being 24%, the child's tax bracket being 0. Where would you rather pay the tax? Who knows what the golden rule is? The golden rule is he who has the gold makes the rules. Not do unto others, but he who has the gold makes the rules. The parents have the gold, the children have to listen to the parents. So you can invoke your right as a parent, because parents do have rights, irregardless of what my daughters tell me. Parents do have rights, and we have to explain to them what's involved. So do you know if your children are your employees, you can give them a cell phone. You can give them their iPad, their laptop, their iPod. Was it Heather that asked about the children in their 20s?
Mhm.
So when you have a 20-year-old, what are they doing? They're driving their car. How much of that car is used for your business? So you can pay for their gas as a business expense. You're going to pay for it anyway, because children always say, I'm poor and I can't afford anything. I'm a poor college kid. That's what my 25-year-old says. I am poor. I can't afford anything. Well, baby, it's all about me and my wife. Isn't that what Eric says, Sheila?
Happy wife, happy life.
That's correct. So basically, the concepts, when you start out leaving your house or your office, that's commuting. So from your first stop to your last stop is not deductible. But if you have a home office, that's all business. So when Sheila and Eric go from their house to the office, that's a business trip. I'm sorry, Sheila, I can't deduct your hair appointment or your nail appointment. I apologize.
What if I go with somebody else that's a realtor and we talk about business?
That's the next story. Okay. Ladies, how many of you get manicures and pedicures? I thought a few of you. I appreciate that, Wes. I appreciate that, sir. When you're sitting and getting a manicure and pedicure at the same time, what happens? Your feet and your hands are both up in the air. You can't do anything personal. So when you're meeting with another professional, you're talking shop. That shop technically is a business meeting, subject to the 50%. Uncle Trump, Mr. Trump, I don't have any political opinions, so don't shoot the messenger. Trump took away the word entertainment. Entertainment does not exist anymore in any vocabulary. I want to teach you a new spelling. Event. So when Chris and Heather go out to lunch, I guess they're having an event. And they're talking business. So Hakeem, if you go out by yourself, when you go out by yourself and you don't talk any work, that's a quiet meal. Quiet meals are not deductible. So what does that say, sir? Always talk with somebody. Get their business card. Always count, always document who you're talking to and the location. That's a real big important thing about documenting. So home to work is never deductible. Job site to job site is deductible. So that talks about commuting. Record keeping. What's important about record keeping?
How long do you have to keep your records?
Good question. I have another cheat sheet on that one as well. There are 1-year rules, 5-year rules, 7-year rules, and permanent. Let's talk about your home. So you buy your home and you make a gazillion dollars. Sheila's saying amen, that you made a gazillion dollars. So what do you do when you have your first home that only costs you $150,000? You want to buy a second home or a rental property. So what are you going to do with the first home? Why would you sell it? You're going to convert that to a rental property. So all the time that you're putting money in doesn't count. Time is worth nothing. But when you do repairs and maintenance and improvements, so such as you putting a new deck on, you putting new flooring in, that goes into the cost of the property. So when you start depreciating the property, you have all the stuff that you've done to your main house that you're later going to convert to a rental property or later sell it. How many people are single? No single. One single. Two singles. Two singles. Very good. We all joined the big rank of the nesty plunge. The nesty plunge is that you got married. You jumped the broom. When you got married, you follow a lot of ideas, and you try not to get in too much trouble, even though all spouses are not listening to you. So we want to be careful about converting a property. You want to say, okay, this is what I put onto the property. So how long do you hold on to the property? And all the renovations you put in, when you put the renovations in, that adds to the cost of the property. So you can depreciate the stuff even though you bought it 5 or 10 years ago. You put the hardwood floors, you put the deck in. So you hold on to the records as long as you own the property and 5 years after. So a lot of record keeping. You can scan those records in. I'm going to make a suggestion about receipts. Do I need the actual physical receipt? Yes. So you go to Costco, you spend a couple $100 and you buy a thing called Neat Receipt. Neat Receipt is a scanner that you can scan receipts into the computer, because what's going to happen in 2 years? Receipts are going to fade. So you can print out the receipt from the computer program. Any big questions so far?
There are some apps you can get on your phone that'll do the exact same thing.
Yes, Akeem.
Yeah, I was going to ask those apps. What are those apps? Because they do have apps where you can do that now. Right, right.
My son's favorite app, because my son's an IT guy, he likes Mile IQ. Mile IQ is a great app for you to record your mileage on your car, business versus pleasure. I just saw smart receipts come through. What else did people have as? Yeah, smart receipt is a very good program. So smart receipt, nobody says there's any fine rule about what you need. Everybody does not need QuickBooks. What's the best thing about QuickBooks? It has a contact management system of where you can track all your buyers and sellers, name and address, and their kids and their birthdays and anniversaries. So when the birthday and anniversary comes up, you can send a card out.
They
Happy
get that
birthday.
for free in Command.
Ma'am?
They get that for free in our system, in our KW system.
Right. So any way that you can track your customers, any way that you can keep your name out there is a great item to do. There's no set rule. Some people like QuickBooks, some people like Excel, Lotus, whatever. It doesn't matter. You should total your receipts and subtract out your expenses.
Can you subtract vehicle maintenance?
Okay, so we can skip ahead to the vehicle. Now, with the vehicle, first you got to record your total miles and track your business miles. So total miles and business miles, in 2021, the mileage went down to 56 cents a mile. In 2020 return is 57.5 cents a mile. So let's use a very, very basic example. You drive 10,000 total miles and 7,000 is business miles. 70%, right? So your first year of placing your car into service, you have a choice. You can take the 57.5 cents a mile, or remember we had 70% business, or we can take gas, oil, repairs, maintenance, insurance, and car depreciation at 70% business. So if you have a luxury car or something that eats a lot of gas or a lot of repairs and maintenance, what are you going to do? The first year, look at the one that works best for you. Parking and tolls are always deductible.
I have a question. So I've been in business. Can you hear me okay?
Yes, ma'am.
Okay. I've been in business 11 years. And so the question that's come up for me a couple of times is whether I can switch back and forth between standard mileage and actual expenses. And I don't think I've gotten a clear answer. I think my understanding is if you started the first time one way, then you can switch back and forth.
No,
So if you could just,
while you have the same car, you guys stick with the same method.
always. So regardless.
Right. So
You have
you
to
stick with the same method. Now, you're married. I didn't see you raised being single. So why can't you use your husband's car,
He also has a business, actually.
right? So, like I said, you have to look at what method you set up and stick with that same method,
So over the life of the car, you are not allowed to switch
right?
methods.
Yes.
Okay.
Consistency is important. It takes away all the IRS saying you played a game here. So if you start out 1 year with mileage and then you go to business actual expenses, and then the following year you go back to mileage, it gets very confusing. So that's why you want to be real ultra conservative. So some people say, I don't want to own a car. I want to lease my Mercedes. I don't have a Mercedes. I have a Toyota Avalon that's 11 years old. But let's say I'm going to lease it. So you don't lease, if you lease a vehicle, because you don't own it, you have to take actual expenses at the business percentage. So when you first lease a car, what's the biggest expense you have when you first start leasing? The down payment. The first big expense you have on leasing a car is the down payment. A while back ago, my friend did lease a Lexus. His down payment was $10,000 and his lease was $797 a month. So he leased it for 10 months. So 797 times 10 is almost 8,000 plus the 10,000. That's a large write-off for his vehicle. So don't discount using the lease versus purchase. Kristen, did you have a question, hon?
I have a question on that. Can you write off that whole thing, the whole entire down payment and the monthly payment?
Well, in the first year of the lease, yeah, you're going to write off the lease, but it's based on the business percentage. The government's going to give you a chargeback. You guys know about chargebacks, right? When you have somebody who cancels a deal, or you have a complaint, or a concession when you make a deal. When I bought my house, my realtor had to buy the bar because my seller didn't want to give the bar up. So he had to pay $200 towards my bar. Well, the IRS has a penalty when you lease. So it's based on the value of the car, cost, and they take away a portion of the lease payment, Rebecca. It's stupid. I don't agree with it, but it's chump change when you boil it all down. Let's see if there's any other big questions. So, startup expenses. I had a realtor. I don't remember where she came from, but she's been looking to get into the business for years, but she never got a license. Then what did she do last year? She got her license. So now all the cost of setup is now deductible. So she spent $10,000 in setup expenses, and she spent $3,000 in vehicle gas and $2,000 in traveling because she wanted to find out whether it was better to be in Atlanta or be in DC. By the way, she did decide on DC. So setup expenses of setting up your business are deductible. Tim, did I see your question, sir? Okay, good. So let's talk about real estate expenses for the normal realtor. Advertising, billboards, brochures, business cards, mail, email, internet, leads, marketing, postage, postcards, print ads, signs when you put up signs outside. I have a guy that paid for his signs to be installed. Continuing education, magazine subscriptions. You don't know what the average customer is thinking, so you have to outthink them sometimes. So you may want to buy motivational books on top of just picking Mr. Eric as the coach, because he's a daggone good coach. But you may want to buy a Zig Ziglar book. You may want to take a class. How about traveling? How about the convention? Sheila, you had a convention of where everybody joined in one big location.
Mm-hmm. Yep.
When you went to that convention, what did you serve?
What did we serve?
Yeah.
I'm not sure I understand what you're asking.
Food.
Well, you served food, you served drink.
Right.
No, we
You
just
serve-
ate a lot of food and drank a lot.
Yes. So, did you know that that's not entertainment?
No, it's an event.
That's an event. So, events are good. So, let's talk about when you guys get together. If you're just casually talking a job, that's 50% deductible. But when Sheila has a meeting at the office and she serves pastries and soda pop, that's 100% deductible. Sort of like an open house. So when you serve cookies you guys still do open houses, right? Not as many? Okay, so my boys at Ryan Homes used to have a ton of open houses of where they had signs and flyers, cookies, refreshments, punch. And of course, there's nothing wrong with a little bit of alcohol. For those who drink, for those who don't drink, there's nothing wrong with lemonade and iced tea. So you may travel. You may spend times at hotels. Cell phone. So what's wrong with an answering service? In the old days when I started, there were pagers. No such thing nowadays. But internet, voice over IP. You know, now everything's fax, scan.
Guarantee half the people on this call don't even know what a voice over IP is. Unless you've been doing this a while.
Rebecca, you think we're old enough to have these people understand voice over IP?
Yeah, we use it all the time as millennials. Maybe people don't know what it is, but yeah.
We are doing voice over IP right now. We are doing that right now. Zoom is a voice over IP, basically, with more fanciness, with pictures. So who knows what my wife's favorite buyers are? Coach and Fendi. Anybody know what a Fendi is or a Coach?
Yes.
So people know what Coach bags are.
Seriously.
They know Louis Vuitton, right? Very good, Shannon. So can a Louis Vuitton, can a Fendi, can a Coach be a briefcase? Can you fit a contract in there? Can you scan your contract using what do you call those little things? Thumbnails, zip drives. So I guess that's called a book bag or briefcase. Mr. Wesh, I bet you've had a couple briefcases.
Yes,
So,
sir.
so now we have scanners. Of course, you got to keep your computer up to date. So you have hard drives, laptops, Palm Pilot, Scions, all these new items. People are using their cell phone as cameras. But in my days, not to
None
date
of my
myself,
agents better be using their cell phone as a camera to be pictures on the houses though.
well, they have, you might need to do a full length video,
Video.
There you go. You can use it for video.
because you can also do a virtual tour.
Mhm.
And what happens when your client, Rebecca, what happens when your client's out of town and you have the contract written? You're going to use DocuSign. You guys can use DocuSign, right? Right, Sheila? DocuSign is one of the greatest things invented. I hate it because I need paper. So what can your children do when they work for you?
Answer text.
I'm sorry, Jen?
Answer text messages while I'm
An-
driving.
Answer text messages. They can look at the new homes listed. They can look for the sale by owner and make you an inventory list. They can follow up and make phone calls for you. They can set your calendar. They can run everything through the system and set up these Zoom calls, set up your appointments. So when you take a client out, okay, when Sheila takes me out to buy a house in Falls Church, okay, and we start at 11 o'clock and it's 2 o'clock. What's Sheila gonna do? I'm getting hungry.
I'm gonna take you for lunch.
Right. So is that lunch a business meeting or casual entertainment?
It's an event.
It's an event, yes. Good call, Shannon. It's an event. It's all deductible because you're not talking pleasure. You don't want somebody to have an excuse to cancel the other 2 shows that you have to do. So whether you stop in for donuts or hamburgers or deli, I don't care. That meal is 100% business. No pleasures involved. So what happens when you grow up and you move out of your house and basement and you get an office? You're going to pay rent and utilities. My daughter loves her home. She rents from my wife, which includes utilities. But we're realtors. We use our personal homes as our office when we're not at the KW office, which is lovely. Thank you, Sheila. So what do we do with our home offices? Has anybody ever taken a home office? Good, good. I love you, Rebecca. Thank you. So how do we calculate a home office? You take the total square foot of the whole house inside based on the place that you're using. So you take your office room plus storage plus the bathroom. And that gives you your business office. Business office versus total office gives you business square foot. Come on, Mark, really? Yes, really. So when you have a home office, you're going to depreciate your house.
Did you
We
say
have to
bathroom too? I'm sorry, I missed that.
Yes, you take the bathroom too.
I thought it was
Because you're
exclusive use only.
Well, you tell me when you're selling real estate from your home that you're not going to use the bathroom.
Right, but my
You're not
kids are
going to
also using it.
Yes, exactly. But it's right outside your office. They have their bathroom upstairs. You have your office and you have your bathroom right outside your office. So that's your regular exclusive office. So you're allowed to have a bathroom outside your office. So it's part of your office. We're not talking an office bathroom that's more than what, a 5 by 10, 10 by 20. You're not really having a gigantic bathroom. Not like Sheila's house, right? Sheila has a 50 by 50 bathroom. We know that, right? I am a jokester. I tell people, pardon my jokes, they are bad. They are 2/3 of a pun. PU, they stink. Going back to the home office, you take your interest on your house, then you take your taxes, your home insurance, repairs to your house, utilities. What utilities? Gas, electric, water, cable. But I didn't mention internet. I said internet is a business expense because you can't reach Sheila without your internet. So internet is not a home office item, it's a business expense. So IRS says prorate. How much of your internet is used, Kristen, for you and your family versus business? 60% business and 40% personal?
It's
Or
mostly
whatever.
business.
Yeah, whatever percentage you feel is reasonable. It's not real important. We're trying to maximize. So you said, Mark, depreciate my house. How do I depreciate my house? Okay. When I go in and buy my house cost $207,000 in 1995. I was real cheap back then, Sheila. I was real cheap.
You're still real cheap.
Thank you very much. Because I answered to my wife. She told me what I'm doing. So I take the land value off the top of the building. So if you don't have the county tax assessment to show building versus land, you're going to take normally a 20 or 30% land value and everything else is building. So on a $100,000 house, I know that's not realistic, but it's easier for the math. On a $100,000 house, the house costs you about 130, so you're depreciating 100. The 100, you get 3.5% a year of the building portion. So at the business percentage, that's why we want to add the bathroom in, Kristen. We want more business percentage. An average realtor's home office is between 20 to 30%. Some more, some less. Some people have mission control. I was in this one lady's house. Her real estate office was 60% business. Her kids had moved out and she took over the basement. And she had computers, she had tickers, she had everything all set up all across the basement. So everybody is different. There is no rhyme, no reason. Does anybody have any real big questions about home office?
Yes, I do, Mark.
Yes.
A couple of things. Now that COVID has basically shifted everybody back to home offices, take Sheila and pretty much everybody that's been in the office that, let's say, have concerns about coming back into the office, this shifts their home office configuration substantially.
Yes.
Has the IRS loosened that up at all?
No. If you're an employee, my employees, even though we telecommuted from March to June, and then I moved into a new office. So when we were telecommuting, my home office, my wife put me in my attic. I had 2 desks and a chair. And that was my home office. So because I'm an employee, I cannot take a home office. Most realtors are not employees.
Right.
They're independent contractors, or as the IRS says, statutory non-employees, so they don't get W-2s. You
Mhm.
like that one, Sheila? That is right out of IRS code. So
I
because they're
looked at Shannon and she had a big smile on. She liked that one.
so statutory non-employees are allowed the home office. So
Okay.
maximize your home office. Put stuff on the walls. I have Escher prints. I have my fish. I have TV sets.
Well, that used to be one of the biggest flags for the IRS was business use of a home. And so, you know, you kept it to a very small space, but now that the climate has changed, the office space configurations have changed along with that. Not to mention people who actually have offices here. How does the IRS balance that now that the configurations have changed based solely on COVID? People that would normally come in the office every day are now at home.
Right. So if you have a home office, okay, what does the company tell you to do? I'm pretty sure KW does have a policy saying, I don't want to get sick. I don't trust you. I have no problem with that. I want you to sell because you make more sales in the field than you do in our office.
Exactly.
Even though it's a lovely office, I enjoyed it. I will come back out after COVID. But IRS has not relaxed their procedures. However, they are short-staffed. They are working from home themselves.
Great.
They don't have the manpower because they just finished putting a new president in office. Okay, and his new office politics are kind of stupid and against all public common sense decency, is what I had a little mini discussion with Sheila before we started the call. So our new president is not pro. I have no political opinion. My wife did not tell me what to say. I strictly rely on what my wife tells me. So I'm a wimp. I'm a house husband and I follow her instructions.
Good man.
Easier. Why fight? Make love, not war. So
So
the
now
home
that you
office,
broached that subject, if you don't mind,
ma'am, I'm sorry.
now that you broached that subject, if you don't mind,
Go ahead.
can we also talk about the proposed tax doing away with capital gains and 1031 exchanges in the new
You
tax
can go
plan?
Sheila, it's all your class. You tell me where you want to go, hon. I can stop and start on a dime. And everybody else, we can do that same thing with other questions. I do have one question that I want to
I think
answer
there's a
first for
couple.
Heather. If I can answer Heather's question. Heather's question was, do I have a job description for my son or daughter? Yes. My daughter and son, what they did is that my wife was a piano teacher. So they cleaned the instruments, they vacuumed and dusted. What would you hire somebody to do similar work? Sort of like a secretary or a Girl Friday. You have your basic duties, jobs assigned, and other duties as assigned. So
Mark,
if I ask them to work on the computer, if I ask them to do spreadsheets, copies, you put that down in writing. Who is going to look at that, Heather? Nobody. But you have the documentation in case somebody says, why did you pay your child $12,000? What is the normal minimum wage right now? $11 and change. So let's round it just for easy numbers alone. If we round that to $10, $10 an hour is $21,000 a year. Are your children worth more than $10 an hour? Of course they are. They're your children. They're the brightest and best ever.
They make more babysitting, by the way.
That's right. So you can do that. You can pay them more money. You can give them bonuses. So you want to look about what's reasonable and necessary. Robert
Mark?
Half Account Temps has a good compensation package. What would you hire somebody to do what you're having your children do, and then overpay your children? And John Tripp had a question as well. Did I answer
Mark.
that question, Heather?
Mark? I
Yes,
had two
ma'am.
follow-up questions on that. So one is, so obviously it's a good idea to have a job description for the kids. I think the initial question was, do we have to have a job description for the kids? And
No.
then, okay, so you don't have to, but it's a good idea too. And then following up, you said essentially it's okay to overpay your kids. I mean,
Of
people
course.
can't really fault you for overpaying your kids.
No, in other words, what's reasonable and necessary? If you're hiring a secretary, what are you going to pay them? My son was going to make $20 an hour at 25 to handle computers. So $20 an hour is $41,000 a year. Let your conscience be your guide. The IRS has two big rules. Ordinary and necessary are good. Lavish and extravagant are bad. Have some type of thought process. If you call the local hiring agency and say, what would you pay for somebody to be an administrative assistant?
Do I have to pay them with a check or can I Venmo them?
Check. Pay them by check. And you also have to do the government filing reports. The 941 and the 940 is required quarterly. So federal unemployment, state unemployment. If you can't do that, if you don't know how to do the payroll reports, ADP is a good company to use, or one of your local accounting firms can do that. But ADP does a better program. What ADP does is that they can issue a paper check, a not paper check. So you can actually take that check as records and just Venmo them the balance. So at least you're producing the paper check, but not giving them the check. Does that make any sense, Heather?
Yeah, it does. It's just that my children are complete paperless.
It
Like,
doesn't matter.
They don't even
Well,
go to the bank. They don't do anything. Everything is on their phone.
Well, you can scan their check to the bank.
Right. But I'm just saying they wouldn't do that. I mean, I could do it for them.
Yeah, sure. So you can
Yeah.
take their check to the bank and deposit it in their account.
Sure.
And then we had another question. John Tripp.
Yeah, it was just kind of a tactical question on when you're making these payments for certain things, how are you paying for? Like, for example, you said your internet is a business expense, but you got to prorate it. How do I pay for that? Do I pay for it out of my account? Do I pay for it out of business?
Well, you pay for it personally, and then you reimburse your personal account for the portion that's business related. And then, so when you're doing your tax return, let's say you're not a corporation. Let's say you're just a sole proprietorship. If you're a sole proprietorship, you're just going to pay for it personally. If you're a corporate entity, partnership, C Corp, S Corp, which I'll come back to.
Yeah.
Okay. If you're a corporate entity, then you pay for it out of the corporate account. Does that help, John?
It does. And I know there's so much more to it. I'm an LLC as an S Corp.
Yes.
So let me ask another question, because obviously, I know you haven't made a pitch, but I'm looking for somebody, and I think I'd love to have a conversation. How do you switch from somebody that you've been with for a couple of years, paperwork, all that kind of stuff? And again, maybe you can address that at the end, or maybe offline or something, but obviously breaking up with somebody on this
how do you take, I think I can shorten your answer. How do you take a perfect hand in glove treatment? You've been with your accountant 5 to 10 years, and they're missing the boat, or they're not as aggressive as you want them to be.
They don't have strategy.
They don't have strategy. They don't think outside the box.
Yep.
I think outside the box because I've been trained as a small business accountant. I'm not the typical accountant. The typical accountant says, give me your records, get out of here. Sheila will attest to that. Okay. I'm a strategist. I like to plan and structure and look at the program. You may just say, hey, Tom, I like you, but I have to go in a different direction.
Yeah.
And just, don't play a game, just straight out, right? Say, hey, I need to go in a different direction. And don't share a lot of information and try to dissuade you. If you feel comfortable and it feels like the right maneuver, do it. Do what works for you. Hand in glove, I got a lot of hand in glove clients. I have 1,400 tax clients and I'm still looking for new clients. So it doesn't matter. I'm going to lose a client. I'm going to make a client. People with me in my office are not a number, they're a person. So yeah, John, I would have no problem with you telling your previous accountant, hey, we got to go in a different direction, and just do it professionally.
Yeah.
That's
And
the only thing I
I'm
tell
not worried
people.
I'm not worried about how to break up and all that kind of stuff. I'm thinking of the process of getting paperwork, receipts, that kind of stuff over to the new person. So
I tell people Excel spreadsheets, Lotus, whatever way you do your record keeping, whether you use QuickBooks or whatever, any new accountant can take over from that. You look at the last 2 years of tax returns, and then you look at your personal return to see how your personal or the corporate interacted. And then I tell people, I don't want to be a bookkeeper. So, total up all your receipts and records, and I'll work from your year-end totals. I don't need to audit you. I may ask you, what did you spend $30,000 of equipment on? Or you bought a $150,000 car? Yeah, I bought a Hummer. Yes, okay, fine. But I don't need to see every little document. Does that help?
it helps. It helps. Thank you.
And then I saw another question.
Yeah, there was
Anthony.
another question from Andy.
Andy, I'm sorry.
So he wants to know section 179 regarding vehicles over 6,000 pounds.
Yes.
What's your feeling on that for real estate agents?
Okay, so let's talk about that. Okay. Regular car, any car that weighs under 16,000 pounds, under 6,000 pounds is a regular car. An SUV is $6,000 to $14,000. 6,000 pounds to over 14,000 pounds is an SUV. A dump truck weighs over 14,000 pounds. SUV is a good deduction. However, people think you just take an automatic 25,000 because the car cost you $50,000. No. What did we start out with? We said business percentage. So if you drive your car 10,000 total miles, 8,000 business miles, that's 80%. So up to 80% of the 25,000 SUV is the max depreciation, but now you're stuck with that same car for 5 years. So if you sell it, you got to recapture and put it in income. So you have to look at, do you want to take a big write-off now, or do you want to take a small write-off ratably over 5 years? Have I lost anybody yet? Does everybody understand what Andy's asking?
Yeah, that's very helpful. Thank you very much. You like that deduction for real estate agents? I mean, it applies as much as it applies to a trash truck driver.
I have people that like F-250? What's the big monster?
I drive a 2500 Ram.
Right. So the big monsters, my son likes the truck also. So yeah, I don't mind. I mean, when you're selling a property, if you're selling in the woods, you want something to go over and not stop you. Or if you're doing something in the snow, you want something that's a monster that's not going to slow you down. So it doesn't matter what profession, it matters, can you get your job done? An SUV is perfect for a realtor But like I said, you got to look to see what your needs are.
So you
Yeah,
gotta
not
hold
only
it
that,
for
for
5 years.
realtors.
Sorry,
Go ahead.
But
you gotta hold it for 5 years, Mark?
on any vehicle, you have to hold it for 5 years. If you sell it within the 5 years or trade it in, it's a sale. And you have to recapture depreciation.
Yeah,
So that's the negative about taking an SUV. You're taking a big write-off up front.
right.
And then if you don't hold it for the statutory time, you got to recapture depreciation, which means you're paying taxes on it when you sell it.
Let's say you hold it for the 5 years, then at 5 years and 1 day, you sell it.
Same thing. You
But
got to
if
recapture.
You still, even after 5 years, you have to recap.
Yes. But on the first 5 years, it's a higher recapture than in the later 5 years.
I see. Yep.
I have a guy that bought a $500,000 boat, a houseboat. He made $40,000 fishing. We had a choice. Do I write off the $500,000 boat in 1 year, or do I take straight line and write it off over 8 years? He says, I don't want to be audited for a $400,000 deduction. So we did straight line and stretched out his depreciation, and he still got an $80,000 write-off. So everybody's a different situation. And what are you prepared to do? How good is your records?
Okay.
So everybody's different. Then you got to plan. Andy, you got to plan it.
Yeah.
If you plan your maneuvers,
That'll work.
then everything works good.
Yeah.
Andy, you have kids?
Yes.
Okay, how old are your kids?
6, 5, 3, and almost 1.
Okay, so you buy your SUV, you hold on to it until your 6-year-old becomes 19, and then you give your kid the SUV, and then you buy a new vehicle.
I like it. He'll like that too.
So it doesn't matter who is doing it. It doesn't matter whether it's a realtor, whether it's a doctor, whether it's an accountant. IRS is short-staffed. They're looking for ways that people are abusing the system. So they have developed a profile of what average realtors do. So we want you to look like the ordinary average realtor. So if you make $100 of income and write off 30,000 of expenses, there's going to be a red alarm going off.
Yeah.
So we want to make things easy and less taxing, pardon the pun. So if I gotten all the questions, Kristen had a question about employees as a sole proprietorship.
Rebecca, yep.
Everybody can have employees. Sole proprietorship, partnership, S Corp, C Corp, everybody can have an employee. In an S Corp and a C Corp, when you hire your children, they have to be at least 14 because they have to have work permits. An LLC partnership, LLC sole proprietorship, consisting of only the parents. They don't need work permits because they're exempted. So yes, you can have employees with any entity.
So does that mean with the the LLC that they don't have to be 14? That they could be 10 and stuffing envelopes and licking them and putting the stamps on them?
The LLC sole proprietorship and the LLC partnership, they don't have to be any age if it's their parents. Their parents, if they're 7, they can lick envelopes. But an S Corp or C Corp has to be 14 because they need work permits. So this is in publication 15 at the irs.gov website. You need to be careful. So anybody else have any what are work permits? Work permits is, my son was in high school and he was a junior and he started working. So he goes to the guidance counselor and says, I want to start a job flipping hamburgers at McDonald's. The guidance counselor issues him a work permit, and then he can start working. Any other big questions?
Mark,
And like I
let's-
said, if you
Let's
have
talk
any,
about, can we talk about realtors and how they pay themselves and stay away from the quarterly tax deposits, please?
okay, realtors as a sole proprietorship, your net profit is the same as your net income. You don't issue yourself a W-2. As an LLC, let me confuse everybody. LLC sole proprietorship, you are the same person as the business, as a sole proprietor. LLC partnership, you are a partner, you don't get a W-2. You get a thing called guaranteed payment, and that guaranteed payment, you're supposed to pay estimated taxes on quarterly. The quarterly due dates are April, June, September, December. Now let's go to the S Corp and the C Corp. IRS says when you're a C corporation or an S corporation, whether you're a regular C Corp or an LLC C Corp, a regular S Corp or an LLC S Corp, you have to be an employee of your own business. So you have to pay yourself as an employee. The advantage about being an S Corp, on top of the W-2, you can take a distribution of your profits. You still have to pay taxes on the net profit in the S Corp. And you still have to pay taxes on your W-2. If you lose money in the S Corp or the partnership, that reduces your income as long as you have basis. Did that help, Sheila?
Yep, talk about self-employment tax when they don't have an entity that they're running it through.
As a partnership and as a sole proprietor, everybody is self-employed. So if I make $100,000 of income and I have $50,000 of expenses, I'm going to pay 3 levels of tax on that $50,000 left over. I pay regular tax at my tax bracket. I pay state taxes at my state tax bracket. And I pay 15.3% of the net profit in self-employment tax. So everybody has to pay some type of payroll tax or FICA tax. One of the things that we didn't talk about is pension. A sole proprietorship, partnership, S Corp, C Corp can have a retirement plan. The easiest form of retirement plan is a SEP IRA, SEP IRA. That's basically 20% of your net profit you can put into retirement. You can also have a 401k or defined benefit plan, but that's the basic types of retirement plans you can have. Everybody can have a little different one, but those are the basic ones. I always suggest somebody to look at retirement. A Roth IRA is never deductible. You cannot, even if you put money into a Roth, it does not save you money on your taxes. And any big questions so far?
Yeah, so let me clarify on what I was talking about on the self-employment tax. So yes, the sole proprietor is going to pay self-employment tax. I'm talking about when they have an LLC, whether it be a C or an S, an Inc., C or S, doesn't matter. And they're paying themselves as W-2 employees of the entity. they don't have to pay the 15.3% self-employment tax, correct?
The S Corp and the C Corp don't pay the 15.3, but the partnership does. The partner and the partnership.
Right.
The
So
LLC,
I'm trying to get them to not, to set up entities where they're not having to pay that extra tax, because it's senseless for them to do so. They're business owners, right? So.
well, like I said, I am an LLC partnership.
Huh?
Okay, so I have to pay the FICA tax on the net profit. Okay, I don't get a W-2, I get a guaranteed payment.
Right.
So everybody's going to be different based on their needs. Most realtors are corporations, whether it be an LLC S corporation or an LLC C corporation. Ignore the idiot that says establish a small business trust. Ignore the idiot that tells you to establish a small business trust because they're unintelligible about what taxes and life is all about. They only want to charge higher rates because they're ripping you off. So let's just, see if we can, I hate to consolidate it. C Corp, S Corp, they have pluses and minuses. The partnership, if the partnership doesn't pay for the business expenses of the owner, the partner can write off their business expenses that they don't get reimbursed for. The S corporation owner cannot get reimbursed on his personal return for expenses that are not covered by the business. The S corporation should write the owner a check for his reimbursed expenses or her reimbursed expenses. Have I lost anybody yet?
No, just one question, Mark. On the S Corp and the C Corp, it all boils down to you're going to pay taxes. It's just where you're paying them.
Correct.
Because as an S Corp, you're an employee, you're still paying an employee tax. It's just funneled in a different bucket, so to speak.
Yeah, there's two buckets within S Corp, yes.
Okay.
So it all depends, and everybody has to have their own individual meeting. Now, if I have meetings with any of you privately off the call, I won't share any of your information with Sheila unless you tell me to share information with Sheila. That's just between you and I. That's just you and I having a personal conversation. I have respect for you guys on that. So I think that everybody's got to look at their own situation. So when John had his S corporations have their own issues to take a look at. With an S corporation, in order to deduct your losses in an S corp, you have to have a thing called basis. You have to have skin in the game. If you lose money constantly and you write off more losses than you have at risk, then you don't get the write-off. I mean, I know that's a very complicated over the edge, but I wanted to make sure I got that one in there.
We have two more questions in there. So as a W-2 employee and an LLC sole proprietor, are the goals of avoiding taxes the same?
As a W-2 employee is different than a sole proprietor. So my goal as an accountant is to not avoid, well, yeah, I like the word avoid. Avoid taxes is a good idea if you properly plan your expenses. If you properly plan your expenses and shift income. How many people have their parents live with them? And so we have Kristen, you have your parents live with you. If your parents, and Marty also. So if your parents aren't making that much money and they're not on Social Security, why not income shift to your parents? If it doesn't affect their Social Security, that might be another way to shift money from your higher tax bracket to a lower tax bracket. You're going to still make your parents equal and whole. But if it's going to affect their Social Security, then you want to look at that as another idea. So it's not only kids that you can shift money to, you can also shift money to other people in the family. I have one person that's paying their niece. So I just don't want to restrict, I don't want to restrict it just to children. I want to make sure that you look at everybody in the family, that you have control. People who want to get together with me, my office phone is 301-445-6300. I would love to talk to you. Rosie's my gatekeeper, and Sheila has my email as well. And so emails also go through to me. And if I'm at home, I'll even jump on my cell phone and call from home. So Jen, love to schedule a meeting with you in the real estate, like to make a game plan. I'd love it. I'd love to sit down with you, Jen, and go through things and develop a strategy and a thought process.
You
like
might
I
have a
said-
couple of private messages there.
Oh yeah, that's so like I said, anybody who needs me, please, they have access to schedule. And like I said, January is a great time for me to do planning. Sheila wanted to talk about the S Corp LLC sole proprietorship or the new tax law. Which one did you want to go through?
Go with the new tax law.
Okay. I personally have no political opinion. My wife's not here to tell me what to think.
It's really funny that you say that because I've been with you a long time and I still can't figure out what side of the fence you're on.
Well, I still like girls better than guys. How's that?
Yeah.
I still like girls better than guys. I believe that when somebody says they have a political opinion, somebody may like apples and somebody may like pears. So the only thing I can say about our political process is that all politicians are either elephants or donkeys. So right now we voted out one and put another one in. So everybody's a liar. Everybody's a thief, and they don't look out for your best interest. So how do you like that for non-political? So Mr. Biden does not like realtors. One of his 12,000 proposals is he does not want you to be able to do a 1031 exchange. Who doesn't know what a 1031 exchange is? Does everybody know what a 1031 exchange is? Well, it's a proposal. It hasn't been passed yet. But basically, when you trade a rental property for a more expensive rental property, that's tax deferred. So one of the proposals is doing away with that law. The other thing is capital gains. One of the, like I said, these have not been passed, so we're just working on what the proposals are. What the idea is for Jen is, if you sell stocks and bonds, what do you do? Right now, under current law, anything held more than a year is long-term capital gains. Anything under a year is ordinary income. The proposal for Mr. Biden is it's all ordinary income at your regular tax bracket. Right now, let's say you made $500,000 of income. If you made $500,000 of income and you sold a long-term capital gain, IRS, your tax would be 20% federal and 3% Obama surcharge, plus your state of Virginia. everybody's Virginia, right? Right, Sheila, everybody's Virginia?
Pretty much.
Okay, so DC is 10%, Maryland is 8%, Virginia is 5 3/4. Hi, Amy.
Hi, sorry for coming late. I had a meeting earlier.
That's okay.
Nice to finally see you.
Nice seeing you, darling. So long-term capital gains, the government is not going to be in our favor. Also, when you make more money, he's going to revert back to the old tax law. The top tax bracket right now is 37%. He wants to propose to go to 39.6% tax. Ouch. There's no such thing as an exemption. So when you're filling out the W-4, there's a calculator that says how many exemptions to claim. It's a bunch of malarkey, but I just tell people, name, address, social security number, and sign the bottom and give it to the payroll people. So be careful when you're looking at your tax situation. We want to plan, we want to structure, we want to see what's involved. What are the C corporations right now, according to Mr. Trump, is taxed at a flat 21% tax. Mr. Biden has proposed to raise that tax bracket to a flat 28% tax. So as everything I've been saying today, this is as of Trump tax law. We don't know. Biden's simple 1040, we don't know what Biden's going to do with this 1040. There's 1,200 pages that still haven't been put into motion.
I think one of the biggest things that's going to affect us as realtors is going to be if the 1031 exchange gets taken away, that's going to hurt us in our investor area. And if they get rid of the tax deduction for capital gains of $250,000 for a single and $500,000 for a married couple, people are going to be less likely to sell if they don't have to because they're paying the tax on it. We're already in a really short, tight inventory spot, and it's only going to make it worse for us. So those are two really horrible things for real estate agents if they actually get passed. And it's actually the number one thing that he's looking to do on his tax proposals is hit real estate tax. That's what he's going to do, an $800 billion tax income on just those two things alone. So
like I said, I think that everybody has to be on a swivel. We cannot trust any of the politicians because all politicians are going to lie. Forget who you believe, whether it's Trump, Obama, whoever. Anything they say today is going to change tomorrow. That's why I warn people, be careful, plan. You know, just because we're doing it this year doesn't mean it's not going to change next year. That's why I advocate maximizing expenses, using children or other family members as pawns, shifting money, retirement planning. You have to look at, you know, how are you going to maximize? How are you going to shift? So the other thing that I bring up to people is the real estate game is not the only game in town. What about your spouses that are not in the real estate business who are doing their normal thing? We may want to talk about a future strategy about bringing the spouses into a business venture of where you can look at a tax structure to reduce the family income. That's going to be the key for the next 5 years, I think, is that we need to, whereas reducing your income doesn't do anything for qualifying for a mortgage. It's a two-edged sword. Do you want to pay taxes, or do you want to reduce, your tax exposure? And which way do you want to look at your pocketbook? That's the only thing that matters. You have to see what's important to you guys. I don't think that qualifying is the important thing. No document loans, I just found out, are coming back into play. I don't know how active they are, but they have to be something that we now have to look at now. And also, when your buyers are looking at qualifying, don't tell them to do two tax returns. Do one tax return, turn that into whatever they turned into the IRS. Don't do a fraudulent tax return to qualify, because that will bite them in the butt. That's fraud. That's why they closed down Amundsen Mortgage back in the 90s. They did one return for the IRS and one tax return for the realtor/mortgage company. I don't like people to play in the bad arenas. So I warn people in advance. Be careful where you step. What other good questions do you guys have? My email address, Sheila, you'll give everybody my email address if they can't reach the phone.
It's in the chat.
Biden simplified 1040 form. I don't think anything's simple about what a politician is going to suggest. I haven't seen his proposal, and neither has my teachers. I take about 60 hours of classwork a year, so I'm very well read, and my teachers are national speakers. Tim asked a question: how do I make time for 1,400 clients? One at a time. I start at 7 in the morning. My last one starts at 10 at night. I work 7 days a week. My wife is a tax widow from February 1 till April 15th. I went home 14 times last year. I stayed at the office. I love taxes.
He's not kidding.
I really love taxes. So I've made appointments at 7 in the morning. I call that a graveyard. I've made appointments at 10 o'clock at night. You can ask Amy. I talk on the phone a lot.
You talk a lot. Yeah, you do.
I do talk a lot.
Lots of good information. Lots of good information.
Yeah, it is.
Okay, so I do like people, I firmly believe that you have to look at what's best for the family unit.
Mm-hmm.
So whether it's you and your niece, you and your girlfriend, you and your boyfriend, whatever, you have to look at everybody's overall total good. Every entity has their own pluses and minuses. A sole proprietor is allowed a home office deduction. A partnership, a C Corp, and S Corp are not allowed home office deductions. So you can't take a home office as a partnership, S Corp, C Corp. So somebody's going to ask me, how do I do it? Let's think about it outside the box. Let's do a workaround. It's called a reimbursement plan, an accountable reimbursement plan. How do you look at what makes things happen? Well, how much of your home is business? Let's say 15%. So if you're a corporation, you reimburse yourself 15% of running your home as a business expense, which still accomplishes the same thing as a home office. I mean, I'm oversimplifying this on purpose, Miss Christina. I'm trying to make it simple. It's friendly, but it's structured. We need documents. We need writing. You need a business plan. Nobody's going to look at your business plan. Right, Amy? Nobody's looking. Nobody cares what her and her husband are doing. Okay. The chance of you getting audited is less than 1% chance of being audited. because they don't have the staff. But if they do audit, they want to say, hey, how do you stack up to all the other people in your profession? What's reality? I cannot deduct this tie, but if I give a tie as a gift to Eric, I'm allowed $25 as gifts. Now, if I give, I'm sorry?
Unless that tie is branded,
If that tie is branded KW,
then
it's 100% deductible.
there you go.
Now, I cannot deduct suits, ties, dresses, pantsuits. It's adaptable for everyday wear. However, if it's logoed shirt with the logo insignia, company required, I got pants and a shirt that's logoed. I had stagehands that could not deduct their black pants. They had their logo. This is my joke. I held off a long time, Sheila. I held out a long time for the joke.
Go for it.
They had the union label on their shirt. So how did they deduct ordinary black pants? On their right cheek of their pants, they put the union label on it. And on the left label, as a salute to the IRS, they said KMA. That means a kiss grits. So yes, you can be funny.
Dork.
You can be fun. You can be funny and think outside the box. But like I said, you got to have a reason and a method to what you're doing. You got to have documentation. I don't need to see the documentation. If you, you ask Amy, how much time did we spend? Hour, 2 hours?
Yes.
Okay.
About 2 hours total.
It doesn't matter how much time we take. What matters is that we get the mission accomplished. Mustafa, the main goal is to save you money.
You do that, I have to say. You do that. You're very good at what you do.
The main goal is what's important to you guys. You know, Leah, how do you want to travel? Can you travel?
She wants to go to the islands.
So can you make a sale in the islands? Can people in the islands buy something from you here where you're licensed at? Why not? So that means hotel airfare could be deductible. Remember, ordinary and necessary is the key. Lavish and extravagant is bad. So if Sheila's serving you Chateaubriand, that's a little extraordinary. But there's nothing wrong with a nice Cabernet Sauvignon. Outback, there's nothing wrong with that fancy drink that you get. About what's reasonable. What would you talk about? What would you spend money on? What would you have as a normal business meeting? That's the important part.
All right, so do you guys have any other questions for Mark before we send him on his way and we start with our budget? Because you guys better budget. It's 2021. Did you find it useful? Did you walk away with some information that will help you? Huge thank you to Mark. He's the bestest.
Thank you.
Big hug at you, Sheila. Big hug at you, Amy.
Thanks, Mark.
Thanks, Mark.
Thanks, guys. God bless all.
See ya.
See ya.
All right, so I'm going to jump right in. We should be able to swing through this in 30 minutes without a problem. So I'm going to answer some age-old questions on where do I put this? Where do I put that? Where does this go? In a really simple document that I'm going to share with you guys right now. So give me a second. Let me go back to the top. So here is the MREA. I got to throw you guys somewhere so I could do my hold on. There we go. All right. Here's is the MREA chart of accounts for what you should be paying in any category for your expenses. This you can find in your MREA book on page 157. And that will have the older one. It doesn't have this nice, pretty one that's broken down. And I'm going to send this out to you guys as a PDF so that you have it. So not to worry, don't worry about taking screenshots or writing it down. I'm going to give you this exact presentation that I have right here. And I'm just going to go through this real quick. It talks about if your GCI, your gross commission income. Now, I need to make this a little interactive so that it's not really boring. Somebody tell me what GCI actually means. If you were new in real estate and you didn't know any of this, somebody explain to them what that is.
It's the total amount of money you pull in from your commissions before the expenses.
Well, that could be a little confusing if you're new and you have no clue. So I usually like.
It's your total commission. Total commission before anything. It's what you make on commissions.
Right, before expenses.
Yep. So usually the easiest way for me to explain this to anybody is because the way you guys look at it is what your commission is before. A lot of times that confuses people because they're thinking of the commission check that gets deposited into their bank account. So your GCI is the check that comes from the attorney's office. Okay, so that's what's on the HUD. I mean, on the settlement statement. Gosh, that dated me a little bit. Your gross commission income is what comes from the attorney's office before anything gets split out of it at all. What is COS? What does that mean?
Cost of sales.
Cost of sales. Yep. What does cost of sales include?
Employees,
Marketing,
advertising,
advertising, lead generation.
Nope.
Cost of sale is what it costs you to be in business. A buyer's agent, a commission split, poll taxes, I think.
Yeah, so I'm going to take out what it costs you to be in business because that would be an expense as well. It could be determined as both. But you have the second part of it, right, where it's anything you're going to pay out prior to that deposit going into your bank account. Okay, so that's going to be any splits with the brokerage, any franchise fee, any royalties that you pay, any splits that you pay to a buyer's agent, any referrals you pay out as a referral fee to another agent somewhere. So anything that happens prior to Debbie doing your disbursement authorization and putting a deposit into your account. Got it? Cool. Gross profit. What's your gross profit? What's the easiest way to think about it?
GCI.
Your DA, what you get from Debbie.
Yep, what you get from Debbie, like what you get from the office, what's deposited into your bank account, right? Now, what are your expenses?
Everything else.
Anything that it costs you to do business, right? Anything that you have to pay for, whether that be lock boxes or signs or marketing or coaching or expenses such as trips or meals, anything like that. What's your net income?
How much you take in.
Income less expenses.
Right. How much the business makes or you make after every single solitary thing is deducted, right? So that's your bottom line. So when they talk in your mind about what's the bottom line, that's the net income, right? So now you guys know the difference between GCI, check from the attorney's office, cost of sales, anything that you pay before the deposit happens into your bank account. Gross profit is what's deposited into your bank account. Expenses is anything you pay out of your bank account as being able to do business. And the net income is what you are left over with at the very end of everything. All right, cool. So there's different categories under like occupation, education, coaching, supplies, and it'll tell you what your percentages need to be based off of $150,000 GCI, 340, 640, 970, 1.6, 3.4, and then it gives you best practices at $1 million, which is what the Millionaire Real Estate Agent was built on, right? So everything you see in the Millionaire Real Estate Agent is going to refer to that column. And they built it out a little bit more because over time, people were building things out and selling more. So GCI of 2.5 million is now a new best practice. All right, so here is the most fun budget worksheet that I found, and I just adore this one. So these are your business expense categories. This lines up with your MREA. So under compensation, what do you put here and what don't you put here? Obviously, you know what you put here based off of what it says right there, but what's the one thing you don't put here? That seems to confuse everybody the most. Let's put it that way. So if you're a business, right, you're Susie Q LLC, and you're paying salaries to an admin, you're paying, you know, payroll taxes, you're paying your accountant, your attorney, what aren't you putting here?
You're not paying yourself?
You're not paying yourself there. Absolutely. Tim, why aren't you paying yourself here?
That's gonna be wages.
You're not paying yourself here because you're a business owner, right? And technically the net profit is yours as the owner of the business. Now that doesn't mean that I don't say to agents that I want them to pay themselves through the business, right? And when that time frame comes and you're paying yourself through the business, you and I will work through your budget worksheet on where we're going to do that. We're going to do that as a below the line expense. So I'll work with you on that. But normally this is not so that you can run with the percentages from the MREA. This is not where you put your salary, because you are going to throw yourself so far out of whack if you do that, that you'll be like, oh my gosh, I can't get myself to my profit at the bottom. It should be 40% and I'm at, 22. What did I do wrong? And the first thing I'm going to look for is the fact that you paid yourself here in compensation. So this is the one thing that I really love about this, because I've had so many conversations with agents about where to put certain things. So under lead generation, they're going to do subcategories of listing management. So that's where you put your photographer, any repairs that you pay for to have done in the house, any staging, lock boxes, utilities, sign writers, that kind of thing. And then as a subcategory of lead generation is your marketing. So any of your print, your direct mail, your internet leads, your Facebook ads, your client appreciation, and so on and so on. This is probably the question I get the most, though, is the listing management stuff. Where does it go? And it goes under lead generation. Does that help anybody? I know that's got to help Kristen. Her and I have had these conversations about 800 times. Where do we put that? Where do we put that? So that'll give you your total lead generation expense, and then your occupancy. So when you guys are breaking down your office bill, if you're paying a desk fee, your desk fee is going to go here. Then your E&O insurance is going to go in a different category. So just make sure when you're paying your office bill, to get really accurate, don't lump sum your office bill right here, because you're going to throw yourself off just slightly, because later you're going to see how you pay for insurance. Okay. So here's going to be your office rent, how much the office cost. And then let's see, hold on one second. I got somebody, there we go. All right. Then down, I'm just gonna office insurance. So you guys aren't paying office insurance, but if you were, like if you had an office somewhere and you're outside, you had a mega agent office off-site, you'd have insurance for your office. Then any of your education or your coaching. So if you have a MAPS coach or you're doing any, every time you're buying one of these, you're writing them off. Any of the books you buy, any of the education events you go to, any of the trainings that you go to, write all of that off. Every ounce of it gets written off. I've actually seen people go to extravagant locations for training. And I'm like, you could have got that training local, but that's how they write off their travel. So I'd rather you teach the class in an extravagant area. It's much easier to write that off than it is to go to one. All right. Office supplies. Does anybody else feel like their office supplies, maybe it's just me, maybe I'm just obsessed with office supplies, but I always feel like my office supplies category is so much money. So this is where you're going to do your board dues, any courier stuff, any delivery charges, any type of both board stuff. Now, I'm going to tell you what I do. I have a subcategory for board dues under the office supplies so that I can break it apart and I can tell like how much I'm paying in board fees and stuff like that. And again, you can always subcategorize things, but if you want to run with the MREA, it's got to at least all be under the subheading of supplies and office. And then communication and technology, so your cell phone, your websites, your internet, any of the realtor.com. I hope you don't use that. It's such a waste. Cameras, anything that you're doing will be there. And then automobile, again, depending upon how you're doing it, if you're writing off your gas mileage, or if you're taking your deductions through gasoline maintenance and repairs, are for tax purposes, not for your accounting purposes, right? Remember, there's two totally different things. You still have to calculate how much gas you use, how much maintenance and repair you're paying for on your car. It just doesn't then become non-taxable, okay? So don't confuse the two. And then your equipment. So anything that you have in the office, any of your desks, your computers, your furniture, any paintings you have on the wall, anything that you're using to decorate the office. And this is where, so if you guys see on your office bill, there's $15 E&O insurance every month on your office bill. Don't lump sum that up into office bill. Make sure you break it apart and put your $15 a month here so that you can calculate what your E&O insurance is at the end of the year.
Hey, Sheila, on that point, I actually do the same thing in terms of I pull apart that whole office fee because there's technology in there, there's training in there, insurance in there.
Yeah, it all goes to different locations. It all goes to different categories, if you will. Yeah. So try not to lump sum the office bill when you're doing your budget and your P&L. Now this is just the budget. This is how much you're going to spend in every category. And again, this is going to be figured out by where are you in your real estate career, right? You're going to budget much lower if you're a brand new agent just starting than you're going to be if you're like, Kristen or Gaskins or Duck O'Regan, right? Like their budget expenses are going to be much higher than yours. But these are the categories. And I think that's where people get confused the most is where do I put what under what field? And then that you would add that all the way up and then you'd get what your projected budget is going to be. And this is the thing that I wanted to talk about because I think that people, they do the business budget and they forget that they need a household budget, right? You have no clue what money you need to make unless you know what you're spending on a regular basis for yourself personally, right? And the thing that I see people do in budgeting that is the biggest mistake is the fact that they budget big categories like, mortgage payment or their insurance or their car payment. and they forget the really important things that you do on a very regular basis. Like if you love Starbucks and you go every day, did you budget for that one coffee per day? Are you budgeting for any dry cleaning? Are you budgeting for your haircuts or your nail appointments or your, you know, I don't know, beard shaving, whatever it is that you do, your pets, going to the vet, food for them, groomer. And I think that, you know, if you're tithing or you're donating, you know, giving money, you're doing donations. And this is another one that had a lot of really good breakdowns of things like snow removal. Like, are you paying somebody to remove the snow? If we were in a worse area, that would probably be more popular, but like landscaping, gardening, home repair, security system, so many things I think people forget about that are really expenses. And until you hone in on what your expenses are, you're not going to know how much money you need to make. The only good thing is in this area, you can make a tremendous amount of money. So I think that's why people get away with it here so much, that they don't have a home budget, is because they make a lot of money. So it's not, doesn't feel necessary. But until you start holding your money accountable, you then don't, if you don't hold the money accountable, then you don't know what you can then do with the money, right? Because most of it's going out the door. And I'll tell you, this is the category that I guarantee every single person, the first time they do their budget, is the most shocked about. Your food category, how much money you actually spend on food, eating out, going out to dinner, buying groceries. That seems to be the one, like people are like, wow, I didn't realize I spent that much money. Krista, would you agree that getting a hold or being aware of what you spend and your money is a game changer?
Absolutely. I mean, and it took me a long time, Sheila knows, to get there, for lots of reasons. I mean, one, there's emotional anxiety. I think there's just a lot of emotions around money. I need to read that book you guys told me to read. And the kind of fear of the unknown. I mean, all that. There's just so many reasons not to do it. And so I didn't do it for a long time. And since I have now really gained a grasp of this and clarity around this, it's a game changer, 100% game changer. Like, I feel more confident and just more capable to be able to make better decisions.
Yeah, and so what are some of the things that once you started getting a grasp on that have changed in your world as far as what you're doing with the money now that you know that what you actually have? I mean, because you've done a lot of things over the past year, purchase-wise, that might not have been the same case if you were not aware of where your money was.
Yeah, absolutely. Sorry, I'm trying to put my kids' headphones on now. You can't hear me.
Sorry.
What have I been able to do? So yes, I bought 2 new investment properties this year, and absolutely, I mean, I wouldn't have again had the confidence to make those purchases had I not felt like I had a good grasp on where my money was, how much was coming in, how much was going out, you know, how much I was spending regularly. I would not have made those purchases.
Yeah, absolutely. Absolutely. It just gives you a sense of security. It really does. And so I'm going to stop sharing for a quick second, just so that I can let you guys understand. Every single person I've ever done a budget with, the first time, has felt a raw emotion inside of them. I've had multiple people cry. I've had men and women both break down because there's so much emotion attached to this piece of it. Like, numbers are numbers, but they mean something, right? And they have feelings, whether or not, you know, I don't know about you guys, but my mother used to say all the time, money doesn't grow on trees. You're not going to walk in the backyard and pick it off the tree. Or, you know, like, money's the root of all evil. Like, you know, there are so many misconceptions about money that we tend to carry that with us. And so budgets aren't to hurt you or harm you. And they're completely disastrous at the beginning, like completely. I've never ever seen anybody do a budget the first time that it was perfect and it made sense and everything was great and fine and dandy. Most of the time it was, oh my gosh, I spend too much money in this location or this area. And I'm talking about budgets and P&Ls, profit and loss statements, when I talk about this. And so I need, let's just say, I need $100,000 to live and I only make 60. Like that's the biggest aha in a budget. And that's where debt happens. That's where people will put it on a credit card or they'll borrow. And the ultimate plan of a P&L and a budget is to get you completely out of debt, to get you to a point where you start to save, and then you start to invest that money to wealth build, right? It's a mind shift that has to happen here before it happens on that paper though. And so this is all really important stuff. Christina, I'm so sorry. I didn't have the chat up, so I didn't see when you said, what do you put there? Do you remember where that was? You were asking that question.
Oh, no, that's okay. It was just that top line. You said this is what you don't put there for the compensation.
Oh, right. So what you do put
yeah.
there is anything else that's listed there is what you put there. But a big thing that people always do is, as a real estate agent, a lot of agents pay themselves, right? So they pay themselves from the business and they want to stick that there. And it doesn't belong there. That's for whoever else that you have that's hired in your business that gets paid, just not you. Because as the business owner, you're taking off the profit off the bottom.
Okay, so that's really, the comment was really geared to people who have teams that, or if you have somebody that you're paying under you.
Yeah, so if you're paying somebody, or if you have a contract labor, let's say you're doing repairs on, somebody's house and you contracted somebody to do it, or you have a cleaning service, go and clean your client's house, that's contract labor. So those are some of the things that you would pay there.
Okay, got it. Thank you.
And then Kiana, you said, seems like a good sheet to track expenses for taxes. It's a great sheet. But remember, this is the budget, right? So this is how much money do I need in order to pay the bills that I think are going to happen. The P&L, your profit and loss, also called an income statement, is, okay, the month is over, I've paid the bills, and now I'm left over with, okay, how much went to expenses, this is how much I made in income, and this is what I'm left over with profit. Right? So one is a predictor. It says, this is what I think is going to happen in 2021. And the P&L is the actuals. This is what did happen. So we're talking about the predictor right now. And then Mustafa, yes, I am absolutely going to share this all with you. I have editable versions of some of these things too that I'll share with you. And that book that we were just talking about is The Psychology of Money.
Yeah, I need to read it.
Yeah, great book. Either read it in print, get it on Audible. Really, 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 really good.
So Sheila, I'll just follow up on what you just said in regards to the P&L versus the budget. Again, it took me a while to kind of figure that piece out too, in terms of, frankly, I had to get my P&L in order first. And after I got my P&L, then I was able to do a budget. And that was just for me. Not everyone might be like me, but I had a hard time doing a budget because I'm a high C. So I wanted like my numbers to be accurate. I wanted, I had a hard time projecting out of thin air. So once I tracked my expenses for, some time, then I was able to go to my budget and say, okay, this is what I did last year. This is what I expect. And then the one other thing I'll say that was really hard for me about doing a budget that I overcame was, in real estate, you have some fixed expenses and you have some variable expenses. So the best example of that is salaries versus listings for me anyway. So like salaries are fixed expenses for me. I mean, I do have admin people who I pay regardless of how many deals I do. So that's me. My biggest fixed expense probably. And then for listings, I have a lot of expenses around listings, but if I don't have listings, I don't have those expenses. And same thing, I don't have that income. So again, I had to create in my budget a variable, like I did it on Excel, where I was like, okay, again, I projected estimated listing numbers. And so if I do this many listings at this average sales price, And at this average commission, this is my income. So that was the top of my budget. And then down below, I had all my listing expenses and it was tied to that number. So I said, you know, every time that number up top changes, in terms of if I change the projected number of listings, then my listing expenses changes as well.
And you can find out what your percentages are, right? So that you can just change by the percent. So if your listings increase by 10%, obviously your listing expenses can increase by 10%, right? So just, it's not really too hard.
Learning how to do a basic Excel spreadsheet and use basic formulas in Excel is a really, really, really good thing to learn, because that's how I'm able to do that budget and do what I just said.
And I'll send out to you guys Melinda, if you would do me a favor and just real quick write down the attendance of who's here so that I can make sure I email the right people. I'll go by memory and somebody will get forgotten. I will send you guys an Excel spreadsheet of how to do both budgets, and I have a simple Excel spreadsheet for a P&L too. So if you're just starting out and you don't know how to do it, it'll show you with the formulas and everything in it. So.
Sorry, I had somebody behind me. What was that you asked me to do again?
If you could just take everybody's name down that's here and then send it to me. This way I can make sure I email them the stuff I just promised.
Absolutely.
All right. Any questions about budgets? Now, what is budget? When do you do a budget? There's a better question. When do you do a budget? Well, if you've never done one, you do it now.
Anytime, the answer is anytime. If you don't have one, you start.
Right, you start now. But you do it sometime October, November timeframe because you want to predict what has to happen in your business for the following year, right? You need to know what your expenses are going to be and what's going to happen. If you've never done a budget before and you have a full-fledged business that you're running and you're moving along and things are flowing already, I see a lot of people do it very much the way that Kristen did it, where you do the P&L first, right? Find out what are your, P&L means profit and loss. So what are you either profiting each month or losing each month, right? And in our business, if you guys are losing, let's have a conversation because we have to make sure that you're profiting because otherwise you're not really building a business. Do the profit and loss first because that's going to give you ballpark of what your expense categories are and what you're spending money on. What's the easiest way to do a profit and loss? Print out your bank statement. Print out your bank statement. Write down every little expense that you spend that has to do with business.
So also have a separate credit card just for your businesses and then putting all your business expenses on that credit card. That's another way to do it too.
Yeah, and I'm going to warn you, before you do that, there's got to be a level of responsibility that comes along with that. And that could be a trap for some people. So I would prefer before you do that, that whatever the line of credit is on the card, that you have at least that much money saved in a bank account. Right? Because then I can guarantee that you're not going to get yourself in hot water. Because I've seen people get the credit card so they know every expense that they have, and then they don't pay the credit card at the end of the month. And actually all they've done is run up debt, right? So be responsible first and do it the simple way. Now, over time, should you get a credit card for your business? Absolutely. You can get points back, cash points, points for travel. I mean, there's a lot of reasons why you do it, credibility, your credit. So yes, but wait until you take your baby steps first. Cool. Any other questions? It is 1 o'clock and I want to hold true to my time with you guys. Anybody scared of doing a budget? And if you raise your hand, I'm perfectly fine with that. If you don't raise your hand, yeah, thank you, Becca. See, it's my girl. You should be scared of the budget. It's scary. And if you want to do it with me, I'll do it with you. If you're afraid of it, we can do it together.
I'm scared, by the way, too. So
Yeah. It's
can I
very
actually
scary.
like talk to you like after this is done for like
Yeah.
a quick 5 minutes?
Yeah, sure can.
Thank you.
Absolutely. I'm always here for you guys
Hey,
if you
Sheila, this
ever
is a
need me.
question.
Yeah. Maybe we'll do a budget workshop where you get paper and pen. We have this, and I always tell people, do your budget on a paper and pen first. I love the spreadsheets and you can put it in after. There's something different. There's a different feeling when you're actually writing things down, and it kind of feels a little like, wow, that's a lot of money right there. Or, oh, I have a little more room to spend in the budget over here, right? You can't spend any money until you make money. So make sure that you're doing your lead generation. Cool.
If I could add one thing, anybody who needs help with Excel, I can help anybody.
She's a genius with Excel. I've never seen anybody. So Shane was good. Nothing on her. She teaches Excel classes, so I'm just saying.
I was a certified Microsoft trainer, so if anybody has any issues with anything,
talk about a hire, right?
Just reach out to me. I'm happy to help. I've also built budget models. So this one's very simple. Sheila, are you okay if I remember the one I built based off of that model? Remember, I sent it to you in Excel.
She is so funny. So she decided to take the MREA book, and she did this whole big spreadsheet off of the MREA book, and she's like, this is what agents should do. And I was like, you're here 1 week. Forget all that. And she's like, oh yeah, it just made sense to me. And I was like, whoa.
So happy to share any of that with anybody.
Yeah, absolutely. Cool. All right, guys. Have a fantastic day. Hopefully you got a lot out of this. We have a packed training calendar. Try to make it to as much as you want. We did really well on making sure that we got in there everything everybody asked for. I'm waiting for 1 or 2 people to just confirm for some of the investor stuff. But other than that, I think we got it all there. So, hasta la pasta.
Thank you.
Hey Sheila, did you get my messages?
I'm answering you right now. Yes, we are meeting tomorrow.
Awesome.
Yeah.
Okay, see you. Thanks. Bye.
I did so good. I didn't hardly cough the whole time.
Well, I'm glad you're doing better though.
I'm doing good, right?
Yeah.
Hey, Sheila.
Okay.
I got.
Wes,
Mark was so good.
are you trying to talk
ask
to me?
my main question.
Say that again?
Yeah, can you hear me?
Yep.
Can you hear me?
Yep, I got you.
Oh, I said Mark was so good. I forgot to ask my main question. Okay. Do you think we could reach back to him and find out what is the percentage from a commission that we should be deducting to pay our taxes from federal and state? I've heard like 20%, 24%, 10%.
So the rule of thumb is 30%.
So that when we,
The rule of thumb is 30%.
okay.
Yep.
30,
And
is
again,
that,
you
is
know,
that 20 for Fed or 20 for Fed and 10 for state? Okay.
well, you're going to just deduct the 30, put it into one tax account, and then your tax accountant is going to tell you how much you pay out of that, and then you'll pay it out of that account. So just build a tax savings account,
okay,
right? Take the 30%, deposit that right in there. I'm going to tell you one fail-safe way to do it is Debbie can set you up to have your deposits made into 2 bank accounts where you deposit your commissions in one and you take 30% and put it into the other. Okay, and that's a surefire way for you to make sure that you're saving your tax money. Now, I've told everybody to do that, and I don't think there are more than 2 agents in the office that actually took me up on it. But that's a surefire way to make sure you don't.
Okay.
So I should create a savings account as well, just for taxes.
Wes, did you say something?
Thank you.
Sorry. So you're saying create a separate tax account, like just a savings account, and just put 30% in it for so when tax time comes around.
Yep.
Okay, got it.
And I guarantee you by the time you pay your taxes, you'll still have money left over that you can then transfer back into your business account or into your regular account.
Okay.
But 30 is the safe number, right?
Gotcha.
30 is the safe number.
Gotcha. So the question I had was, what do you
Mustafa, do
think?
you need me on?
Yeah, I'm gonna wait.
Okay, cool. All right, go ahead.
Okay. What do you think is the best marketing, I guess, ROI? Because like I see like people use Market Leader, Boomtown, or things like that. What or Realtor.com? Like, what do you think is the best one to use? Because I don't want to like throw money everywhere to everyone who calls my phone.
Yeah, absolutely. So I had Boomtown and I did Zillow leads and I did Realtor.com leads. The only one I didn't do was Trulia. And I can tell you that organic leads are much cheaper. It's about hitting your database. It's about talking to your database. For the statistics on internet leads is for every 100 leads you receive, you will close between 1 to 3 of them.
Right.
So it takes a lot of money to get 100 leads. Right?
Okay. Yes.
What I would do for you though is if I had to say, if you wanted to do some sort of leads, I would do the Facebook leads through command. And the reason I would tell you to do that is not because I want you to do leads in Facebook or I want you to use command. It's because if you do $75 worth of ads through command, and you screenshot your receipt for the ads each month and you send it to the office, we will take it off your office bill.
Gotcha.
So it's in other words, you're paying for leads for yourself, but we're actually paying you back for them. So
Gotcha.
it makes more sense. But before you do that, you have to do a couple of things. One is you have to either check out and write these names down.
Okay.
Marty Miller. Nick Baldwin.
Nick Baldwin.
And my favorite, Lori Ballen, Ballen. I want you to go to all 3 of their Facebook pages. I want you to like them. And then I want you to find them in any of the Command Your Conversion or any of the KW command pages. And they will show, or you can YouTube them. You can Google them or search them on YouTube.
Okay.
And all of their videos on how to do the most profitable Facebook ads through command.
Okay. Yeah, I was going to ask that too. Okay. Thank you.
Yeah. Now that's one. 2 is before you do that, you have to have a follow-up plan for your thing. So the next thing I want you to search is best follow-up plans.
Okay.
If you go into command and you go into the library and smart plans, you can find some of the best, and they rate them, like people rate them, how well they do. You can find follow-up plans for Facebook ads there.
Okay, and that's in Smart Plans on command?
That's in Smart Plans, yeah.
Okay.
So what I'm trying to tell you is before you go throwing money out the window, do a little research.
Yeah, that's what I wanted to do because I'm very secretive about what I do. I don't know why it's a thing, but when I first started, I gave money to Quazu and something else, and then I was just like, okay, yeah, why did I do that?
Yeah,
so
they're
now,
all going to call you and they're all going to swear that it's a great thing and da 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 da.
Yeah.
And real estate agents love that shiny object. Steer as far clear away from that as you can.
Yeah.
Because it really is just a money grab. I had an agent once about 3 or 4 years ago. She was behind on her mortgage payments. And she came to me and said, I'm going to pay $3,600 to go put my my information on shopping carts in the food store. And I was like, please take that money and go pay your mortgage. Like, you're not going to get a dime off of that. I'm telling you right now, like you might as well throw the money out the window.
Yeah.
Sure enough, she never got a dime off of it. And they almost put her house in foreclosure.
Yikes.
And they did, right? Damn. So what I'm trying to say is be careful because they're all going to sell you something. They all got something to sell.
Right.
Right.
Yeah.
Nothing better than just good old fashioned relationship building.
Gotcha. I was gonna ask something else too, like just now, and it literally just slipped my mind. So I'll probably text it if I. Yeah. Oh no. Tomorrow I have a phone meeting with someone that I got from Yelp. And they want to decide. It's in Woodbridge. They want to decide whether they want to rent or list. Should they rent or list? So yeah, I just wanted to give you a heads up that was happening tomorrow.
Yeah, absolutely. So I want you to remember what just happened in that HEX class. Okay, and I want you to make sure that when you're talking to these people, that you tell them that if Biden, and chances are, when he implements these tax plans that he's going to do, if they're going to sell right away, it's not going to affect them.
Okay.
But the longer they wait, if they get hit with capital gains tax, it's going to cost them money to sell the house, far more than they probably anticipated. And so they might want to think about doing it now.
Got you. Okay, because I also have an older couple that I spoke to last month, who also came to me with the same situation, and they're still deciding. So I'll definitely send them an email about that as well.
Yeah, and an older couple probably has a more emotional attachment to the house.
So they live in Bel Air. Actually, this is they just have this house, and they're not using it as much as they thought they were, and they were deciding, should they rent it or should they list it? And it's also in the same neighborhood as Lisa Pham's listing in Fairfax. I know
that one. The 625 or 630 was the price on the CMA, right?
I
I remember it.
Yeah, so that one, and yeah, so I'll make sure to send that.
Yeah, make sure you tell them.
Okay.
Right. Cool.
Okay. Thank you.
You're welcome. Gustavo.
Hey, how are you, Sheena?
Good. How are you?
How are you doing? I hope you're doing better.
I am.
Good.
All up here.
So I've been hearing a lot that the real estate, they have LLCs that they are working with. I have an LLC that I have all my investment money in it. I've been one of my goal was to do a lot of foreclosure and auctions. I've been in auctions literally every day in different counties. So can I combine those two? Can I use the LLC with my real estate or?
Absolutely, 100%. Yep, you sure can. So you just have to get your LLC license by DPOR. It costs $210 for them to license it as an entity, and then we'll pay you to the entity.
So I should do a LLC by DPOR. What is that?
Yeah, I'll send you a DocuSign. It's already all there. You just have to fill in the information and then it'll come back to me. I'll sign it and then we can send it off for you. We'll overnight it to DPOR for them to process a business entity license for your LLC. And then once you have that, then we'll pay you, instead of paying it to you directly, we'll pay you to your LLC.
Oh, all right.
That's
Is
usually
that
how
more benefit? Yeah, is that more beneficial to do that?
Yeah.
Okay.
Yeah.
Perfect. I appreciate it.
Yep.
All right.
Yeah, without a doubt. So.
All right. Thank you
very
very much.
Did you get a lot out of the class?
Yeah. I came late a little bit. I had another meeting, but yeah.
Awesome. Cool.
Yeah, it's gonna take a lot of process to learn all this stuff, but